Well, right now, as far as the jobs are considered, we have to think that the jobless numbers that came in at almost a million, have to think that when it comes to that sort of number, that we've had this start and we've had this stop in terms of opening and closing of economies. Right now, we're back to closing the economy. So we're seeing, at this particular point where the markets know that this is happening, they've priced it in there. This has been a bigger jump that we've normally seen. However, it's not at all unexpected, being that the economies are so fragile at this point and that the COVID numbers are at all-time record numbers here. So we have to keep that into consideration. We also have to look, why is the market shaking this off? That could be near term. The markets could see some pressure going forward if these numbers were to continue, and we have to keep that in mind. Being an investor, you're careful by nature, but not too careful because then you don't make money. The biggest challenge is there enough vaccine for everyone? We were supposed to be at 20 million people vaccinated at this point, and we're not. I think we're barely at 4 or 5 million. So, what you're seeing in the big cities, New York, Los Angeles, and the like, where they're opening these super centers, they're lowering the criteria, they're opening it up for people who are 65 and over. In particular states, they're opening it up for people who have pre-existing conditions who could be more vulnerable. This is going to create, the market's looking for certainty, and this is going to create more certainty. We're going to see the market start going up. I've been saying all along that this is the year where we start normalizing. Originally it was second quarter. Now we're talking third quarter of this year where things start to normalize. And the vaccine is the key to that happening, because without the vaccines in place, and there's more to come, by the way. I mean, there are other countries that have different vaccines, but these are the big ones right now. But the key to turning this all around, and the market sees this and is trying to price it into the market, is the vaccine and how the distribution is getting out there. With more centers, more mega centers in the cities, we're going to see a big amount. The question now becomes, in my opinion, is there enough vaccine for everyone? I mean, right now I'm liking the pharmaceutical industry. The pharmaceutical industry, not only for the vaccines, but in general. I mean, there's companies like AbbVie out there, and this company has over a 5% dividend. It has good growth prospects for the future. They have products like Humira and the like. So they have already established pipeline. I like Merck as well. I think Merck has a great pipeline and great dividend and great growth prospects. So this great sector rotation that people have been talking about, rotating from technology and growth into the value sector, when this tends to happen, it's not going to knock on your door and say, hey, we're here and let's make some money. What tends to happen is that it creeps up on you, where you have to decide the names that you want to be in. And these are the two pharmaceutical names that I think are going to grow nicely this year and beyond. People forget that bonds can do very well on the appreciation side as well. So for argument's sake, if investors start seeing value in bonds, they're going to start scooping them up, and inversely, the price goes up. We've seen the yields go on, start to move up, and this is normal. I mean, we've had such a low rate, almost zero environment for so long. You can't freak out because rates start going up. It's just a simple part of life that, as low as these rates have become, it's going to have to start going back. Now, what the Fed is going to have to watch out for is it going to start creeping back a lot or a little? And how much, are they going to have to start raising rates in response to that? And that becomes the big what if, in my opinion. At this particular point, I don't see that, but it could become a concern, or it could come into focus probably within the next 2 quarters or so. And we got to keep a watch on that. But in the meantime, good yields always can make a great part of portfolio, but at under 1% right now, is this the time? So you have to look elsewhere for now, but bonds should definitely be part of any high quality portfolio.
One more question. What about the cryptocurrencies? Now they were hot and scorching, now kind of cooling down a little bit. You think that's still too dangerous for investors to even think about it to be part of a portfolio?
I foresee that like Bitcoin and the like being a high part of any high quality portfolio. And, even though it's in its infancy, it may not be ready for prime time, but, you cannot argue with the returns that are coming in. So you have to do your due diligence. Would I put more than 10% into Bitcoin at this particular point? No, but you have to remember also Bitcoin has gone up significantly. So you want to ask yourself, am I getting in too late? And that becomes the big question right now. I don't believe so. I think that there's still a lot of room for growth. I think that people who are coming in to this were rewarded for what they have done and will continue to be rewarded. I just think that it is not something we're going to bet the house with, but should be part of every portfolio because it is important and it might be the future.